Ladies and gentlemen, we just went through the greatest bull run in human history for the stock market, only to be followed by hysteria and disease shutting down borders, economies, nations, leading us into the 2020 recession. But as many of you are aware, I say this all the time, history doesn't repeat, it rhymes, and this is the time people are going to get rich. We're going to analyze some stocks that when they come back, oh baby, they're going to come back. I look so forward to breaking this down for you, so let's jump right into this.
Drop it.
Welcome back, my passive income investors. I like to dividend stocks that are poised to make you rich during the 2020 recession. So long as you have a long enough time horizon under your belt, these are stocks I'm personally consider buying, but I'm not recommending them to you because you're an idiot and you're probably going to lose money and try and sue me. So this is for your entertainment value only. But starting off with stocks that Buffett would be proud of me buying, avoiding the cruise lines like a plague, we're talking about the airline stocks. We got Delta, Boeing, and Air Canada. Some of the top airline stocks taking some incredible beatings. Though Air Canada doesn't pay a dividend, I wanted to recommend it because obviously I am Canadian and I just watched Trudeau announce that they're shutting the borders down to foreign nationalists.
We will be denying entry to Canada to people who are not Canadian citizens or permanent residents. This measure will carve out some designated exceptions, including for air crews, diplomats, immediate family members of Canadian citizens, and at this time, U.S. citizens.
Which means we're all on full quarantine here, and Air Canada is taking a 64% dive because of it. And we're looking at a PE of 3 right now, which in my opinion sits in deep value territory. Taking a look at Boeing, paying a 6.3% yield, though I do not expect that to last. A lot of these airlines might have to cut their dividends in the near term, but in the long term, everything's going to go back to a norm, and these stocks are going to start cash flowing like crazy. And the fact that you can pick them up on 60% discounts today is like buying, well, a jet at 60% off. And taking a look here, guys, we're going to kind of analyze Delta. I made a whole video on this, but Delta is probably one of the more safer and secure airlines out there with a 4.5% dividend and a PE just under 5. The only thing that matters about these airlines is do they have the cash and the debts worked out so they can survive the next few months under quarantine. Well, the quarantine's only a couple weeks, but we can expect this to ride out and slowly come back to a norm over the year. But taking a look with Delta, they have cash and cash equivalents at record highs, $2.8 billion for 2019, considering they had record revenues and earnings. This stock, man, when it comes back, it's going to come back.
We mentioned airlines, for instance. Let's just start with that. And Delta is a big holding. You have holdings in the other 3 big ones as well.
Sure.
And so how do you assess what's going to happen, and does that change your outlook?
Well, it's going to be terrible. I've always felt a pandemic would happen at some time. I mean, I've actually used that term, I mean, in describing things that can interrupt the progress of not only this country but the world. It may not turn out to be that big a deal when we get through, but it may turn out to be a very big deal, and we just don't know, and I certainly don't know, and nobody knows. But there will be other things that happen in the world in the next 5, 10, 20 years. That's the way the world works. It's not a totally even course. The progress of mankind has been incredible, and that won't stop. I mean, you flew out here, yesterday or today, and you flew over a country that 250 years ago, there wasn't anything here. That's only 3 of my lifetimes, and there wasn't anything here. And now you've got all these bountiful farms, and you got 260 million vehicles in the country, and you got 80 million owner-occupied homes. And we keep making progress. We haven't forgotten how to make progress in this country, and we haven't lost interest in making progress, and that will benefit to varying degrees all kinds of people, including around the world. But there will be interruptions, and I don't know when they will occur, and I don't know how deep they will occur. I do know they will occur from time to time, and I also know that we'll come out better on the other end.
So it doesn't sound like you're selling airline stocks today.
I won't be selling airline stocks.
Moving into another sector that I have been idolizing and trying to find the best stocks possible have just opened up every door because we're talking about REITs. And REITs do not perform well whatsoever during recessions. And Realty Income is probably one of the most famous REITs. It's been on my watch list for years. I've never bought it, but with the world-renowned tenants they have and the increases, literally historical record increases on their dividend, if you could start this off at a 5.17% yield, mind you, the PE ratio is not accurate here on Google. You'll actually have to go in and take a look at their books, but I know it's way lower than that. But we're going to get into its books in a second. Also talking about Wynn Resorts, them casinos, guys, with Macau being shut down and Vegas going to be slowing down. Of course, Wynn is going to take a major beating with a 7.3% yield. This dividend yield might be a little less reliable than something like an Realty Income, but nonetheless, it is a volatile stock with could be considered a wonderful swing trade here. And then finally, my favorite stock, because it's in my backyard, this is the prime of the prime real estate in Ontario. We're talking about RioCan with a 7.4% dividend yield and a PE ratio of only 7 right now. I've been recently loading the boat on this, and I do plan on buying more with its 30% discount. Though it does have exposure to malls, it might be seeing a bit of a dividend cut as well, but I'm going to trust it with its tenants and the fact that it's moving toward doing apartment rentals. I just love this stock. It's a hometown stock to me, and I got no problem holding it. But taking a look and analyzing these companies' books, starting with Realty Income, stocks like these get hit so hard in recessions because the law states that, if you're buying REITs, that you're entitled as a shareholder to a minimum amount of that dividend income. So usually these companies don't have huge cash on their books, but taking a look at Realty Income with $54 million, not a lot for $1 billion REIT, but nonetheless, 2019 was record years. And I really think even if the stock pulls back a little bit, it's not going to be enough to reflect the downside they are currently experiencing. Along with RioCan with a total cash position of $93 million. Again, nothing major, but considering 2019 was such a great year, I just love these stocks. And if you can get some monthly income coming in, helping you continue to average out and buy other incredible companies, you're not going to do wrong. The financial sector is bar none getting hit just as much as some of these other stocks, and the airlines being down 30% with CM. These are all banks I personally hold as of right now. Taking a look at BNS down 30%, and of course Wells Fargo taking probably the biggest hit, down 51% with a 7.7% dividend, a PE of 6 on Wells Fargo, Bank of Nova Scotia of 7, and Canadian Imperial Bank of 6. All of these stocks have been building up massive cash positions to protect themselves. They're called loan loss provisions. They've got all kinds of systems in play and an endless amount of cash available to them, considering they are managing trillions of dollars in assets. These things just don't go anywhere, and they never will, considering the bank, Canadian banks survived the 2008 recession like it was nothing, and a lot of these U.S. banks are world-renowned and some of the biggest of the biggest. In fact, Buffett holds Wells Fargo, still does, and I am honestly loading the boat on these suckers because it is not often, guys, that banks are paying out higher than 6% yields. And again, this isn't a financial crisis we are experiencing. It is a health crisis. Nothing like the 2008 crash. So, to pick these stocks up today are going to be my top recommendations, but you're probably an idiot and you're going to lose money buying something like this, and you're going to blame me. So I'm only recommending these for myself, cracking some jokes here for you guys. Taking a look at some of the balance sheets here, guys. Look at the net income on even Canadian Imperial Bank of $5.1 billion, guys. Take a look at the total annual revenues have been growing on these banks year over year. The earnings have been a little stagnant, but nonetheless, these things are going to do incredible. People still going to be paying their mortgages. A lot of people are worried about the recession, but honestly, I think the government's going to come out in the next few days with a lot more government plans.
Why are the bank stocks so darn vulnerable every time the market rolls over? We saw it again today. The averages get hammered, and the financials were crushed. They were bent, they were spindled, and they were mutilated. The reason? Well, let's puzzle over this. Banks aren't like the cruise lines that might be banning their core customers, the elderly, for safety reasons. As I keep telling you, the last place you want to be during a pandemic is a cruise ship. It'll be a long time before the industry comes back from this. The banks aren't like the oils either, a group that's in the crosshairs of both Russia and Saudi Arabia in a vicious price war. The decline in crude was so swift that the beleaguered Occidental Petroleum already had to shred its dividend. I'm betting others will follow. The banks aren't like the retailers or the restaurants, which are likely to suffer as fewer people go out and the stay-at-home economy takes over. They're not like the airlines with gigantic capital costs, something that comes back to bite you whenever nobody wants to travel. While the airlines are indeed better capitalized than they were in the old days, they never seem to have enough cash to tide themselves over through these periods when people stop flying. And they're certainly not like the big industrials and technology companies that are finding it hard to close deals as enterprises frantically cut back on capital spending to preserve cash, and face-to-face meetings, well, now they're hard to come by. So let's see, if the banks don't have any of these problems, why are their stocks such dogs? Simple. They might not be suffering like the cruise lines or the oil producers or the retailers or the restaurants or the airlines or the industrials. But you know what all those groups have in common? They owe the banks a lot of money.
I think the government's going to come out with a bunch of stuff like they did in the States, where they're offering basically interest-free loans to get you through this. And, the economy, I think, is going to continue pumping along. We're just getting a little hiccup here, but take a look at these cash flows, guys. The financial sector is one that if you want security and safety, again, we're catching fallen knives here, guys, but cost average into this, and you are not going to be doing wrong on your long-term dividend plans. Now, I'm going to recommend some stocks to you that I think are going to do well no matter what. These are stabilizers in your portfolio. If you don't already own them, you're not going to get a discount here, but these are the stocks that are most likely going to do well during this recession, because we all know people be running out of toilet paper out there. But we're talking about Costco. We're talking about Walmart here, guys. These stocks aren't the largest dividend payers, but again, we know for certain that these first quarterly earnings that are going to come out are probably going to be record earnings for these companies, just due to the fact of this recession, the fear, all the stuff going on, people running out, just loading their carts up and their fridges up like it's doomsday. I mean, you can get the idea that the earnings for this overall year are going to be fabulous because of this. So these are the stocks you want to hold in your portfolio just to stabilize it out. You're not going to be catching a falling knife here. You're going to be catching a knife that's only going to be going upwards as soon as those annual reports start coming in. And taking a look at the financials on Costco, guys, look at the total cash they have banked away. We're talking about almost 10 billion with a B in dollars. And considering they had record revenues already year over year over year, it's just going to keep trucking in. And then finally, just to get through this, guys, I want to mention some growth stocks that I think, even though the stocks are down incredibly, they're going to do unbelievably well. A lot of people out there are saying that between Facebook and Google, nobody's buying ads. Like, no one's going out. They're not playing ads. It's going to be part of the recession. They're all going to get hit like everybody else. And it's just not bloody true. Being somebody who is employed pretty much by Google and YouTube and getting to see the actual ad income, to see how much they're paying me in ads per views, they're actually up. People are actually out there paying for ads right now. We're heading into an election cycle. We had Bloomberg spending like hundreds of millions of dollars on these companies, guys. They're not going anywhere. And these companies, I promise you, when those first quarterly earnings come out, they are going to do exceptionally well. I cannot see for any other reason why they wouldn't. And they are also on the top of my buy list, especially Facebook and Google. Google at these prices. I think Facebook's might do better than Google, but at the same time, now that we're getting a massive discount on Google of about 30% from that all-time high there, guys, with a PE of 20, what's Facebook's PE right now? 22. You're not going to do bad. And I would love to know, of all these stocks, have you bought any? Are you considering buying some I didn't mention? Let me know in that comment section below and consider slapping a like. But during this crisis, stay cool, stay awesome, and I look forward to chatting to you all tomorrow.